Hey guys, welcome back to the video, best place for long-term stock investors. Today, we will be sharing our thoughts on Revenue Group. Specifically, right, are they undervalued? They look quite undervalued right now, at least on the surface, or are they a value trap? Now, we don't own any shares in Revenue Group, so that's something important for you to know. And of course, none of what we say should be taken as financial advice. It is purely educational. Also, coming on November 3rd, we have a live training just for you if you're interested in learning how you should prepare yourself for 2023 as an investor. As you know, 2022 has been really difficult. We don't want you to continue feeling that pain going into the next year. So hop on to our training. If you're interested to join, you can click on the link in the comment section or the description. So, Revenue Group. This is a company. I've met the management before. Once during their IPO and another time during a Zoom call. The Dato was very nice to meet me. And I always thought that, you know, they were excellent people and they were right in terms of where they were heading as a company. But unfortunately, the market has disagreed with them since last year, April. Right. So what's fascinating here is that the downtrend has really started happening before the crash that we are experiencing this year. Right. I would imagine the crash only starting closer to 2022, but no, actually it's really more than almost 2 years.
Yeah, it actually started in April 2021 to be specific. And we'll find out why they actually dropped. Have such a massive drop. Okay, so some cool facts for you guys. So firstly is that they are IPO'd in 2017. And back then their market cap is around 82 million, or for those of you who don't know what is this in terms of share price, they are actually around 17 cents.
It's a huge mistake when you think about it.
Because the reason why you wouldn't really get a specific share price is because they did a lot of bonus issue. So it's kind of like confusing.
You go back to the prospectus.
Correct. But the thing is that it actually grew more than 5x since IPO. So it's still pretty good. And another thing is that they only have 2 offices. So it's one in KL and one in Johor. And it is founded by these 3 brothers. So we got Brian Ng Chi Chiao, Eddie Ng Chi Siong, and also Dino.
Eddie,
Yeah, correct. And this is all founded in 2003. It's quite recent. It's only like, I believe it's 9 years ago. 9 years ago, sorry. Yeah. So, sorry, 19 years ago.
Yeah, 19.
19, sorry. Yeah. And their customers that they're currently serving is the financial institution, the non-financial institution guys, online and physical store merchant, as well as the e-money payment scheme. And this is some more definition on what is their role to their customer. So there's this role is that they act as the acquirer for the international branded card schemes and e-money payment schemes. And also they are the master merchant for Visa and MasterCard. So if you don't know what is these 2 terms means, right, acquirer and master merchant, I actually already wrote it down over here, which is actually, you can find it in their prospectus. I wouldn't really go through. Basically, to explain to you very shortly, is that acquirer is basically their role is to receive the payment transaction detail from the merchant. It's as simple as that. And the master merchant is basically their role is to recruit merchants.
Fair enough.
Yeah.
So major customers, A, B, C.
Yeah, correct. So the customer A, they didn't really disclose, but they did mention that this customer A is from the China. So, and actually, if you study their annual report, right, they did mention this company called Alipay. So I got a feeling that customer A is Alipay. But as you can see that their revenue is actually kind of like choppy right now. Initially it's growing, but now it's like dropped and then went up. And then customer B, they did disclose is mBank.
Right.
Yeah. So but then customer C, D, and E, they didn't really disclose.
Right. But by the way, I know I got acquainted with the company 5 years ago, but I've actually never dug deep into this. Is this the first time you're looking at a Revenue Group as well?
Actually, I actually did study like 1 year ago, 1 or 2 years ago. Yeah. And the customer profile is kind of, I think it kind of justifies like why Alipay is their customer and why mBank is their customer. mBank, you can find it in prospectus. Alipay is because in their annual report they did mention.
I see. Okay.
So if you don't know what is their business, basically they are a cashless payment solution provider in Malaysia, and they operate these 3 business segments. The first one is your EDC terminal. Basically it's like your
the white color thing.
The white color thing when you want to scan your credit card. Yeah, that thing machine.
Actually, that's one of the small changes that has been happening throughout the years, where you do get people who, or rather, one of the things that you don't realize, where last time, it's always a silver or a black terminal. Suddenly you start becoming white. A lot of this is from revenue.
And then their second business is their electronic transaction processing, because when you do those transactions, you need to process, and that's their role of doing it. And the last bit is basically their solution and related services, basically like those maintenance services, rendering and all those stuff. And their main flagship platform is RevPay.
Fair enough.
Yeah. Okay, so this is how the process flow. I think you don't, if you want me to explain it in terms of layman terms, right, you just go to a particular store, you just scan your credit card with that machine, then you kind of know the process flow of revenues business, because you just need to scan, then the machine will like get the data of your transaction, and then that transaction will actually go to your, either you have to go through FPX or maybe MyPay or even iPay88, and then you go to the bank, so that they can like process whether the transaction is okay, whether it's clean or not, and then they'll transfer back to the merchant. Then that's how the payment process is, how it flows. And this is a cool fact that if you don't really study the prospectus, right, you wouldn't really notice this, is that they are the payment charge, how they treat banks and also merchants is actually quite different. So for banks, right, they don't, when they rent out their EDC terminal, they don't really collect any security deposits. Yeah, but the merchant, they will collect security deposits from them. So this is something like you can see that there's like a certain relationship has been built with the banks already.
Right. So it creates a stickiness.
Correct.
Right. Not easy to just split.
Yeah, correct.
Fair enough. Alright guys, if you didn't know, we have a one-on-one mentorship program where you can apply for, where we level up your stock investing based on tailor-made solutions. If you're interested, you need to apply. Not all of you all will get into an interview. It's only 20% of you all will do it, and even fewer will get to hop on the program. But if you're confident that you can qualify, you can click on the link and fill in your details in the comment section or the description.
Okay.
So, there's the numbers.
Yes. So how have they been generating, right, in terms of profit? So you've noticed 2 things. One is that the revenue definitely has been going very well. But then the profit, the PBT, the profit before tax and profit after tax has been kind of stagnant. Although it's not really growing as explosive as their revenue, because I think one of the reason is their administrative costs has been like trickling up a lot. Partly also is because the team of inside revenue is actually quite small only.
Okay.
I think they only have like 100 or 200 employees only. Yeah, and they also need to retain those employees because they are kind of like the key to drive this business. Because you kind of need like a semi-skill or even a high level of skill to operate those kind of EDC terminals and whatnot.
Fair enough.
Yeah. So yeah, that is something you need to know. They are very, they have a lot of gross profit. Because they are kind of in a service-based industry.
Fair
so
enough.
about 50% of the, about 50% is their gross margin.
I'm guessing a big chunk of their cost of goods sold is probably like their terminals.
Correct, the EDC terminals.
Right.
Yes.
Okay.
So this is their margins. You notice also that gross margin has actually been dropping, and also their profit before tax margin and everything's been dropping.
But then it's gone up a bit.
It gone up a bit, but then you find out why.
Okay.
There's actually another reason why they actually been dropping. So if you go to the next one, so this is the segment breakdown. Okay, so you notice that the 2 business that is driving, that is giving out the most in terms of revenue contribution is their rental of EDC and also their sales of EDC equipment. Whereas for their electronic transaction processing, I think they only contribute about 30 to 40% of their revenue. And then the last bit is their solution services. So this is something that you need to know. Then if you go to the next segment breakdown, so if you notice, right, the gross margin for the rental of EDC equipment and also for sales of EDC equipment has been dropping, which is their main core revenue driver for the business. But then their electronic transaction processing has been quite stagnant. You can see that it has been trickling around like 70 to 60%. Solutions also, service has been also dropping. And I actually did find out why they have been dropping. So this is the reason why. Okay, this one, you wouldn't get this if you don't really pay attention to their prospectus or annual report because you have to reverse engineer a lot of stuff.
I can see, obviously, you've made love to their prospectus.
Yes, correct. Yeah. So if you notice, right, the EDC sold and the number of units that are actually rented, the number is actually growing for EDC terminals. But if you notice their average selling price and the average rental return that they get from their EDCs, right, they're actually been dropping.
Wow.
Yeah. So this is actually a kind of cool fact that you can know.
And is this sounds very negative?
Yes, correct. Because right now, because I believe they are in a very competitive landscape. So which means in order to attract customers, right, they have to lower their price.
Yeah.
And also there's like those bulk purchases and all the stuff. Yeah. Then they offer like discounts.
Makes sense.
Yep. So yeah, as just now I pointed out, they are doing a lot of competitive pricing strategy. So the first one is definitely they are spending a lot of software development costs so that to ensure that there's no faulty in their transaction and whatsoever. And also they do a lot of cross-selling with their maintenance service and the sales of EDC terminal. So it means, right, if let's say they sell a EDC terminal, they may lower the maintenance fee that they charge to their clients. So this is the offer that they give their customers. And then the third point is that the rental charge for financial institution is lower than merchants, as I mentioned in the previous slide already. And the last bit is that they do provide discount for bulk purchase for the EDC terminals. Yeah.
Wow. So, balance sheet.
Yeah, balance sheet. So basically, this actually it looks quite good that their cash is actually been growing, I think, around like 2 times already.
Yep.
Like 1 year.
But of course, the big thing that's really sticking out to me right now is that long-term debt.
Correct. I believe that long-term debt, I think is for their capital expansion. I'm not sure whether is it for their offices or their EDC terminal, because their EDC terminal in terms of the PPE, right, that they spend is, I think it's around like 50 to even 60%.
Oh, that's big, man.
Yeah, correct. I think they are buying a lot of EDC. I could be wrong.
So it's interesting, right? Because if you go back a few slides here, you're saying that per terminal rental revenue is actually declining, but they're spending more.
Right. So this is actually a question that you need to ask. What is really their strategy? I believe they want to capture more market share. So in order to capture more market share, they have to sacrifice something. Yeah, it's an opportunity cost.
But hopefully like the final amount of sales will become bigger than
correct. Yeah. But the thing is, right, this cash actually is not really from their profit generation. Because you see, right, their profits is all like trickling down. It's not really like generating a lot. So actually, how they get this cash is actually from equity financing. So they did a lot of, they call it this thing, the special issue. Actually, is a cool word for private placement. Yeah. So they did a lot of private placement. They also did a lot of conversion of warrants. So that actually add a lot of shares into the company. And also they actually kind of purchase kind of their other subsidiaries and associate that complements to their business. So this is something that you need to know, is that they are diluting a lot of the shareholder value.
Fair enough.
Yeah.
So cash flow, I think it's in line with what we saw previously, right?
Correct.
We can see operating cash flow is going really well, but capex, they borrow money or whatever, or private placement, and then now they have cash, and then so they use the cash spend on.
Yeah, and capex. This actually resulted their free cash flow to not to look as really that attractive. Okay, so because they're doing a lot of this business expansion, definitely their ROIC will be hampered as well. So if you notice, initially the highest return on invested capital that they managed to achieve is around 28%, but then it dropped to 12%. But it's still double digit, still quite commendable. But we'll see whether will this continue to fall or will it like increase.
If you're enjoying the video so far, remember to like, comment, subscribe, click on the notification bell so that whenever new videos pop, you'll know it fresh.
Okay, so after knowing all of their financials and business, right? So this is some of the risks that I managed to discover. So number one is that they are in a competitive landscape. I mean, you can tell already from the average selling price that they charge for their EDC terminal and also the ARR rate that they charge for their rental of EDCs. And the next bit is that they are very dependent on the major customers. Just now, the one that I showed you, the M-Bank, the Alipay and everything.
Company ABC.
Yeah, so those major customers actually contribute about 60% of the revenue. So if they don't really manage to maintain the relationship with them, I think it will hamper their business profitability. And the third point is that I'm not sure whether this is true or not, but I believe they kind of have like a shrinking mode.
Okay.
Yeah.
This is just an opinion, but okay, continue.
Yes. Reason why they have a shrinking mode is because they don't really have the although relationship is built, but then I believe that they don't really have those pricing power.
Okay.
And also they are not really making their operations that efficient. I mean, as you can see, their profits have been dropping, right? So this tells a lot that their mode is not really that strong as it used to be. Yeah, correct. So,
or the flip side is that whatever they're spending today, or they're sacrificing a lot of their profits to secure future revenue.
Yes, correct.
Of course, in one video, we can't address all of this, but that would be a way of thinking about it. So you really have to, ask yourself whether which side you're on.
Right. And the fourth thing is you need to know is that they need to spend a lot of cost in their administration. Because this is a service-based business, so they have to retain their employees. In order to retain their employees, they have to pay them quite a high pay. And then the fifth point you need to know is they are diluting shareholders because they are kind of raising a lot of fund. Even though they have like spare cash, they're actually in a net cash position, but then they're still diluting their shareholder value. So that's something you need to know. The sixth point is you need to know that they follow guidelines of the BNM. Basically, they are tied with the Bank Negara's guidelines and regulation. So if they don't abide, then they may have like the risk of losing out their license to actually do this kind of business. And the last bit is that the directors are actually reducing their stake. Yeah. So if you look at the shareholdings, right, they initially have about 20% stake in the company, but that 20% actually cut into half, like 50% over the years. So I am not sure why they are doing so.
I think the private placement has to do something about it. I mean, it has to be part of that.
Could be also. But still, it's kind of distills.
Of course, you prefer them to have a higher. Right. This doesn't mean that they've lost faith in the company or whatnot, but maybe they've. Who knows? I mean, it has gone up 5 times, right? The stock, so they probably think maybe time to de-risk or diversify a little bit.
Correct.
Right.
But this is something that you need to take note of.
Yes.
Okay, so the final takeaway that we have for you is that definitely they have a very good growth story. I mean, we are moving towards a cashless society, right?
Yes.
So definitely this will benefit Revenue Group Berhad a lot. But the thing you need to know is that this landscape is actually very competitive. You need to expect like price wars throwing down into this industry, and that will actually result their profit margins to actually reduce quite a lot. And the third thing is that actually they have, to me, it's actually quite a questionable fundraising. Like even though they have the cash and everything, I don't think it's necessary for them to actually raise cash from even equity or even loan. But I believe that I think they are desperate to capture market share.
I see.
So they want to like expand faster. Instead of like gradually expansion. So maybe
we'll see whether they are right because the spending only happened very recently, right?
Correct.
So give them at least 2 to 3 years to see whether or not the strategy.
And the last one is also my own personal opinion also is I don't know why the major shareholders are pulling out. So this is something that you need to take note as an investor if you plan to invest in Revenue. And I think that's about it.
All right. Thanks, Jonathan, for your thoughts. Revenue Group has always been a very unique company with interesting people running it as well. Again, we are not shareholders. We are just here try to as neutrally analyze the situation as possible. If you know someone who owns a share, share this video with him, or someone who plans to own the share this video with him or her. And guys, thanks for staying all the way until the end, and I will see you in the next video.